So, going to give you a little rundown here on. Well, this is not actually. Let me get to the right. I have for you here. So, I want to talk about Chinese stocks. Now, this is a very important lesson for those of you who don't really know how to invest, which is 99% of the population. Now, I issued a warning about 4 or 5 years ago focused on Alibaba. And I specifically warned that Alibaba is not a legitimate listing on the US stock exchange. I specifically discussed that it was a variable interest entity. It was a contractual arrangement set up by Jack Ma, and you didn't really own anything. And I warned about it. I warned that, number one, Alibaba was set up in the jurisdiction of the Cayman Islands, so you don't have any jurisdiction there. The U.S. shareholder has no jurisdiction there. Number two, I warned that the Chinese government, through its court system, would determine any potential legal issues. So the bottom line is that the variable interest entities are set up by Chinese companies that are in China. They go offshore, create a shell company, and through contractual agreements, they promise to provide shareholders in the U.S. ownership. And in fact, that ownership is not recognized by the Chinese Supreme Court. I mentioned that several years ago in the research. I went over and I specifically talked about Alibaba. I talked about it being a shell company. I talked about it being in the Cayman Islands, and I warned my subscribers to stay away from it. And this document in front of you here, you can see it's almost a year old. You can go ahead and read it. I've got a lot of information I'm going to show you. And what I wanted to show people is that it's just shocking how people don't do any basic due diligence. And another thing I wanted to mention is that a lot of people bought Alibaba because Charlie Munger bought it. Oh, the blind guy, the guy who's legally blind and he wears glasses that are like 3 inches thick, the lenses.
If these numbers are accurate on Alibaba, and because of Munger, I believe they are accurate, I think Alibaba is a stock that I want to own for 5 to 10 years, at least.
If you're going to buy a speculative stock, okay, fine. Okay, fine. If you're a high profile guy and you're thought to be this wonderful, great, legendary investor, and you have exposure to millions of investors, do you think it's responsible for you to tell people that you bought it? Because you're basically saying, look, I bought it and I bought more and I'm doubling down. He's basically saying you should buy it. Unless Charlie Munger comes out and says, look, I bought this. It's risky. I don't recommend anyone buying this. It's a lot of risk. Unless he says that, he's effectively endorsing the stock and getting people to buy it. Correct? Yes, 100% correct. That's number one. Number two, what legitimate, credible expert in the investment world would buy Alibaba when there's this much risk? Massive risk. Charlie Munger, quite simply, is incompetent. He's incompetent and he's senile. The evidence is pretty clear. Major risk with Alibaba. It's not a legitimate stock on the U.S. exchanges. Now, let me tell you what can happen. Listen, sir, I'm sorry, I don't have access to my books. They were the printer Ingram, very large distributor, suddenly, without reason, terminated the contract with my publishing company for no reason. You can imagine what the reason was, probably. Um, so I don't have access to it. I won't put it. I actually checked recently on a company to try and make it available for sale on my site through an ebook platform, and they wanted $5,000 per year for that software, that secure software. So it's not going to happen. Okay, sorry. Unless you can find, sir. Let me explain something to you. When you have a person that's banned, they have no reach. And if you have no reach, the economics don't work for a lot of things. If you have a lot of reach, you can be a chimpanzee and have 2 million subscribers, and you can sell shit on a stick, and you can do anything you want because the economics favor you. You understand? I am handcuffed and have been for over 10 years now because I've been banned by everybody. Okay. I'm the top guy, the single top guy in the world. That's a fact. I'll go up against anybody on that. If anybody wants to wager me with money, anyone legitimate, yet I'm banned. Okay. That's the amazing thing, right? Anyway, let me go on now and talk about this. You know, you're not going to hear this type of talk in the open. And you wonder, I mean, think about it. Shouldn't the hedge fund manager, shouldn't Patrick Boyle be talking about this? Right? Nah. What's he talking about? Let's take a look. Patrick Boyle, the fake hedge fund manager, the guy that was a hedge fund manager a few years ago and doesn't know jack squat about anything. Look at the topics he talks about. He talks about topics that are covered in the news. Tax the rich? What does being cut off from SWIFT mean? Economic effects of Russia's invasion. I mean, think about this. This guy's a clown. He's out of touch with the markets. Look at this. What happens to sanctioned oligarchs act? Who cares? You're claiming to be a hedge fund manager. Why don't you navigate the market and show people how to make money or protect their assets? You understand? This guy is a joke. He's a clown. He's a joke. He's not being called out. Right? You understand? Sir, CTRS, I'm sorry. I apologize. I can't. It's not able to be available. I've tried. Best I can tell you is even better than that book is the AVA boot camp series, which is much better actually. That's a series of about, well, each program. There's 2 programs I did. It's about 20 videos of about, on average, 2 hours long. Very advanced stuff. Actually, I don't consider it advanced, but most people do. If you're trying to compete with other investors, you better know a lot of stuff. You better be really experienced and be advanced. Your knowledge better be fucking hot shit. Because if it's not, guess what? I'm going to be on the other side of that trade taking your money. You understand? This is what I'm talking about. Most of these kids don't have a clue what's going on. I'm learning so much from you, Kevin. I mean, like if you don't know, like if you're not getting access to top level insight, you're not going to have an advantage. I mean, think about who you're competing against in the market. You're competing against millions of professional parasites, Wall Street and the affiliate parasites, who not only are very experienced, very knowledgeable, and have very deep pockets, but they also have insider information. I mean, how can you compete against that? And then it's funny because like these kids who don't even have the first clue about understanding that main point, these are the same kids who use trading apps like Robinhood and Webull, which rip you off on every single trade. You get scammed on every trade. I mean, it's just shocking to me what's going on out there. Anyway, let's move on here and ask yourself the question: why is this guy who claims to be a hedge fund manager, and he's not, putting stupid nonsense that like a teenager could come up with this stuff, right? This is like commentary. He's a hedge fund manager. He wants to tell you he's a hedge fund manager, so you think he knows the market. Look at his videos. Does he know the market? He doesn't know jack, which is why he's a former hedge fund manager. he blew up. Okay. And hedge fund managers don't e-beg. They don't have Patreons. Okay. This guy is a big loser, like all these other pseudo investment experts on YouTube. Another grifter, another e-beggar, another loser. And you follow these guys, you're going nowhere in your life, guaranteed. Write it down. Okay? Write it down. So let's go on now. We got some lurkers in here. Probably Tom Nash. Tom Nash, he watches all my videos. Hey, Tom, do you appreciate like I'm teaching you stuff? I noticed like you're using the proper term now, CPI. You're using consumer price index instead of core price index. You're learning a lot, aren't you, Tom? So let's go over the topic of the day, and that is these Chinese securities. Now, first of all, the one thing I did several years ago, first thing I did is I defined the types of Chinese securities. Do you all know the types of shares that are out there? Anybody? There's about 5 or 6 different types of Chinese shares. Do you all even know that? If you don't know what the hell you're investing in, expect to lose your ass. Boom. Okay? But you see, all these kids, they just want to follow what's going up. And that's why they didn't buy Alcoa at $7 like I recommended to my people, to my subscribers, who are now up by about 1,500%. That's why all these kids on YouTube, they have all these tech stocks that are getting cremated. They don't have the stocks that are up 500, 600, 1,000%, because they don't understand investing. You see, they follow Kathy Wood's bullshit. That's what's going on. Posted my video, why Tom Nash won't respond to my $10,000 award. I will give him $10,000 if he proves to me he was a Wall Street analyst. The guy's a complete fraud. He's a complete liar. He's a complete idiot. He's an internet marketer pretending to be an analyst. And it's shocking. Nobody's called him out. All these people on YouTube promoting all this financial investment information are all either complete idiot losers gaming the algorithm with just posting garbage and posting links, which most of them, almost everyone who posts links is doing it illegally. If you don't have an affiliate disclosure by an affiliate link, you're breaking federal law. Look it up right now. Look it up. FTC law. They're breaking federal law. That's about everybody on YouTube. Think about that. And then you think, who's a sheep? Folks, if you're a sheep, you're going to get slaughtered. How come I'm the only guy saying this stuff? Because I'm the leader. I'm the guy that does the slaughtering. Okay? You see what I'm saying? Let's go over now the different types of Chinese shares just to get you guys started. Okay? You guys are lucky because normally something like this would be a webinar I charge money for. I don't really do talks that I give for free, ever. But it's important for people to know that there's real experts out there instead of all these fraudsters and idiots on YouTube trying to game the system and charge people money for things that they're not qualified to speak on. So take a look right here. See that? You've got A shares, B shares, H shares, red chips, P chips, S chips, N shares. Did you all know that? I went over this about 5 or 6 years ago. I don't even cover Chinese stocks. And I went over this because I cover the emerging markets. I cover FXI. Anybody know FXI? Anybody? FXI is a ETF by iShares, and it goes over the 50 largest Chinese securities that are listed in Hong Kong. That means they're H shares. Okay. So what you've heard about recently, and by the way, I challenge you to find anybody who would do a live show like this without preparing. You understand? Everyone's got their script. Patrick Ball couldn't do this. This guy's a clown. He doesn't know what he's talking about. But you see, I'm a real research analyst, world class. So I know a lot of things, and I can talk endlessly on a lot of things. And it's legitimate, not bullshit. Anyway, so let me continue. Here's the issue, okay? The issue is that you all saw the Chinese market sold off. And by the way, let me just mention something. Take a look right now. You can search on this. February 15th, what happened? about 4 days after I released my research from February, cautioning people to stay away from Chinese stocks, to wait for a major sell-off, and I'm talking big time, for FXI. I'm not going to get into that forecast, but I basically said, no, no, no. This monetary stimulus is not going to help the Chinese economy. It's a defensive move because Chinese economy is in trouble. That's what people aren't talking about. The Chinese economy is in trouble. There's a lot of problems going on, and nobody really understands that. So what happens? Wall Street comes out. Look it up. February 15th. Goldman Sachs, Credit Suisse, Allianz, Bernstein, all the Wall Street firms come out and say, this is a time to buy Chinese stocks. Guess what happened after that? They collapsed. They all collapsed. Now, you had a lot of people in there, a lot of the Kathy Wood followers, even though I don't think she has Alibaba, but, it's the kind of stock that she likes, right? Disruptive innovation. Bought Alibaba. I even had some of my folks, my subscribers, ask me about Alibaba. I don't know, about a year ago when it was about $170, and I said, why would you take that risk? Yeah, it's down a lot, but you understand why it's down? Alibaba has a lot of risk. They might get delisted. Do you understand that? I've gone over that before. Why would you take that risk? That's what I said to this person. I said, look, if you want to stock something kind of like Alibaba, just buy Amazon or something like, or Google or something like that. You don't want this risk. And take a look now. It's half the price. Okay. People very rarely appreciate when you save them from losing their ass. They don't appreciate that. But it's a huge benefit because at the end of the day, what you bring home in investments is a combination of how much you make and how much you lose, right? And for many people, they need to curtail their losses. Their losses are what is holding them back, right? So anyway, the point is that the Chinese securities sold off, and the big issue is with which shares. Anybody? Which shares? The A shares, the B shares, the H shares, the red chips, P chips, S chips, N shares. Anybody know? What's the big issue with? Have you heard this from anybody? Of course not. No one's going to talk about this stuff. Now, I'm sure there's some lurkers here who's going to copy my information and put it on their own video, so they can create content to get views, so they can pump their affiliate links and put people into Webull and Robinhood, which screw people, by the way. Anyone posting affiliate links to these trading apps, those people are trying to screw you. They're trying to make money off of your misfortune. Those trading apps are 100% guaranteed fact scams. Write it down. You can write it down. You can tell them I said that. I've known this for years. They're all selling order flow. I talked about this as early as probably, 6, 7, 8 years ago, before anybody even knew what the term was. They're all selling order flow. If you're selling order flow, someone's buying the order flow, right? And they're giving you money, right? If someone is giving a brokerage company or a trading app money for order flow, they're doing it for a reason. What's that reason? Because they're going to take that order flow and they're going to fuck the people with the orders. They're going to give you a shitty price and they're going to front run you. They're going to get in before you, give you the screwed up price, give you the high price if you're buying or the low price if you're selling. I knew this was going on as early as about 13 years ago when it was in its infancy through Citadel and E-Trade. I've probably talked about that before. I'm not going to get into the details. But anyway, so somebody want to answer me? For instance, well, let's start out with this. What type of shares are Alibaba in this list? Anybody? Well, I've never heard anybody talk about what type of shares they are. They just refer to them as a variable interest entity, the VIE. Yeah, or the order flow is criminal. It's criminal. And do you know why? The SEC knows this. Do you know why the SEC is not doing anything? Because their buddies are the crooks making all the money. Ken Griffith, all these hedge funds. Folks, you all have no idea how criminal the SEC is. It's a criminal mafia. Believe me. Believe me. And all large hedge funds engage in insider trading. That's fact. I know. Believe me, I know. All large hedge funds. The only exception would be the hedge funds whose primary investment strategy is something like for instance, Bill Ackman, who tries to he pumps his stocks and pumps all types of things in the media, right? He pumps things. He manipulates the market, and he's already got a trade. You know, there's several of those guys. The fact is that, and it's shocking that listen, there's so many things I could probably mention about 100 facts that all investors should know that are simple and almost nobody knows. How do I know this? Because I've talked to people. One fact, for instance, real hedge funds don't want the public to know what they're invested in. That's a fact. That's a fact. Write it down. When you have hedge funds that are openly disclosing what they're investing in, they're trying to manipulate their trade. They're trying to get you guys, the sheep who watch the media, to pile into their trade so they can dump it. It's a form of a pump and a dump. Anyway, Alibaba is probably an in share. I've never heard anyone talk about that designation, but you can see from this chart, it's probably an in share. It's categorized as an in share, right? But it's a variable interest entity. That's the important thing. Now, I'm going to show you something here. I'm going to show you something. You can read this, and you can get a better idea. You're listening to somebody who wrote about the China U.S. trade issue 15 years ago when it was in its infancy. I wrote about China using Mexico as a back door to evade trade regulations. I knew about all this stuff. Okay, so you can read this from this list here. So just read this. I'll let you go ahead and read it. The nature of Chinese investment in the United States is changing. While Chinese foreign direct investment in the United States fell in 2018, venture capital investment in cutting edge sectors has remained more stable. Okay. U.S. laws and regulations and practices afford Chinese companies certain advantages that U.S. companies do not enjoy. Chinese firms that raise capital on U.S. stock markets are subject to lower disclosure requirements. Lower disclosure requirements. In fact, let's talk about that. Chinese companies listed on the U.S. exchanges don't have to abide by Reg FD. Does anybody know what Reg FD is? Fair disclosure. This came out after the dot-com collapse. Reg FD. We'll get to that a little bit later. Chinese companies listed in the U.S. markets don't have to disclose things, enabling them to engage in legalized insider trading. So, after the dot-com collapse, many of you were probably still in your diapers during that time. Something that passed due to all the fraud, and there was massive fraud, called the Sarbanes-Oxley. Sarbanes-Oxley bill was passed into law. And that was a reform of Wall Street, had many different components to it. Very complicated law. And one of the things that came out of Sarbanes-Oxley is something called the Public Company Accounting Oversight Board. And that was created to oversee, among other things, foreign companies listing on U.S. exchanges. Now, ever since about 2013, I believe, there have been laws to require China to open its books. The auditors based in China need to open their books to this entity. Okay. And they've avoided doing that. So around 2018, 2017, 2018, the SEC once again came back and started talking about this requirement. Of course, it ramped up a little more during the trade dispute. It's not a trade war, by the way, it's a trade dispute. China actually has engaged in a trade war. I'm not going to get into that. But so the problem is that almost 250 Chinese companies have not allowed this agency, the PCAOB, to come in and take a look at the papers of the auditing. And we're talking about, in many cases, auditors that are from the US, but they're Chinese based, like PricewaterhouseCoopers, for instance. You have to understand it. If you weren't around during the dot-com bubble, the collapse, you got to understand that was the shame of these auditing companies. They signed off on accounting fraud. It was kind of like the financial crisis where the credit rating agencies signed off on toxic mortgages. So you had these auditing companies from the US, the big three, plus many others, they engaged in massive fraud. And you had unprecedented accounting fraud in the US, which pretty much caused the bubble to pop, the dot-com. And so we're talking about many of these same companies are pulling the same crap in China. And the Chinese government will not let them show their books, show everything that it's requested, because they call it a national security threat. So think about this for a second. Is Alibaba going to reveal its auditing reports to this government, this U.S. government regulatory body? I don't think they're going to. And they have about until 2024. Okay? I don't think they're going to. So think about it for a second. First of all, let me just mention the reason why I initially, about 5 or 6 years ago, talked in my research about Alibaba and this shell company structure on the Cayman Islands, how you're not getting the real company, you're getting a piece of paper which is not enforceable by law. You basically are owning nothing when push comes to shove. Okay, because think about it for a second. Think about it. You could own Alibaba stock for 50 years, and maybe it goes up by 20,000%. You think the Chinese government cares? Alibaba, Jack Ma's telling two stories. He's telling the Chinese government, oh, look, it's okay. They don't own anything. And he's telling U.S. investors, oh, look, we're listing in the U.S. You want our stock? We're doing great. If you have that stock for 50 years, hasn't paid a single penny in dividends, Chinese government doesn't care. Anytime there's a dispute, it's going to go, there's two jurisdictions. It's going to go to the Cayman Islands, which the SEC has no jurisdiction over. Okay? None. And it's going to go to the Chinese Supreme Court, which U.S. investors are going to be screwed. This has already been proven, by the way. There's already precedent out there. I talked about all this stuff about 6 years ago. Ask yourself who you're listening to, folks. How come you didn't hear this a long time ago? Think about this stuff. All right. So, and there's people eavesdropping right now. They're going to copy my material, of course. But so think about this. Let me show you some things here, so you can read more about the PCAOB. They're trying to inspect the auditing books of these firms that sign off on companies like Alibaba, Chinese companies that are structured as variable interest entities listed on the U.S. exchanges. The Chinese government won't let them do it. Okay? Do you all remember Luckin Coffee? You all remember Luckin Coffee, right? Oh, wow, Luckin Coffee. It's going to, even you go ahead and search, and you'll see on the media, they talked about, oh, Luckin's going to beat Starbucks. They're doing so good, right? Go take a look. Well, guess what? Luckin Coffee wasn't audited. We didn't have access to their books. And you see what happened. Okay? And let me just tell you about Alibaba. I knew about Alibaba shortly after it was launched. Gosh, I can't remember when, but well before 2010, years before that. I got on the site and I couldn't believe it was like a scam central. All these Chinese like trying to scam her. It was nothing but it was a scam website, a bunch of scams. And me being familiar with Chinese culture, having lived in Asia for several years, having talked to people, having even talked to China, knowing what's going on in China. It's a very, folks, if you're not in the Western world, even in America, America is the cleanest country, and it's by far is America clean. There's a lot of fraud and corruption, but it's hidden. Okay. But when you're talking about Asia, you're talking about a culture of corruption. It's just a part of the culture. And it's worse in some countries than others. And I have to believe China, it's the worst. So you're talking about a company like that. Do you really trust the books? This is what's shocking to me about, look, if you want to speculate in Alibaba, buy some, okay, fine, you try. But for Charlie Munger to come out and basically indirectly, implicitly encourage the public to buy it, how he's pumping it, this is a professional investor. You understand, folks? The guy is obviously, he's senile. It's not responsible. It's not even responsible for him to buy it because of the risks. It's much less responsible for him to come out and tell people he's buying it because the media tells everybody that he's a great investor, which we can debate that. That's another topic of discussion. But that right there alone should cause you to question things. No credible, legitimate investor who's thought to be a great investor, and he has a lot of media exposure, should ever tell people, because he's basically endorsing buying the stock, that he's bought Alibaba, given all these risks. Remember, I reported these risks 6 years ago, a couple of years after it went IPO. So let's move on here. You've read this, hopefully. So here's the structure of the VIE. You can read here how it's set up. And so you have in China the VIE set up. You've got an individual, in this case Jack Ma was the owner, and then you have the wholly foreign-owned enterprise. So this would be Alibaba. This would be the VIE. So there's contractual arrangements, right? So this is associated with the VIE through only contracts, through pieces of paper. And then that is listed overseas as a shell company in the Cayman Islands, which U.S. investors have, the SEC has no jurisdiction over. All Chinese stocks listed on the U.S. exchanges are structured this way. You don't own jack. Anyway, so you all understand now how this works, right? These companies from China, they're accessing the capital markets in the U.S. They're getting equity funding, and they have no accountability, zero accountability. Let me show you some examples here. Let's see. Yeah, Reg FD. Here you go. Take a look. Read this. The SEC does not maintain country-specific disclosure requirements, but as foreign private insurers, U.S.-listed Chinese companies are subject to lower reporting and disclosure requirements than domestic U.S. companies. Specifically, U.S.-listed Chinese companies are exempted from Regulation Fair Disclosure, Reg FD, which requires U.S. public companies to disclose material information to all investors at the same time. You understand what that means? It's saying that Alibaba can disclose information, material information, to anybody it wants. It doesn't have to disclose it to everybody. It can tell its Chinese buddies. Jack Ma can tell all his Chinese buddies about something. Alibaba's going to miss earnings. They're going to break through earnings. They're going to acquire a company. He doesn't have to tell anybody else. And it's legal. Okay? So you have legal insider trading in China. Can you imagine that? Oh, wow. So think about that. And take a look here. They don't have to file quarterly reports. Baidu hasn't had a shareholder meeting in 10 years, in more than 10 years. Do people talk about this? Now, I want you all to read this. Everybody remember, you all know Alipay, right? Alipay? Alipay spun off of Alibaba, and then it went into form Ant, right? Went into form Ant. And you might remember many years ago when SoftBank and Yahoo were like, I think combined, they were the majority shareholders of Alibaba, right? Well, Jack Ma wanted to spin off Alipay before and did not want to give that stake to SoftBank and Yahoo, which they should have gotten Alipay, right? He took Alipay and formed Ant Financial, and he gave Yahoo and SoftBank, which I believe were more than 50% owners of Alibaba, he gave them $6 billion in a settlement. Take a look. Ant Financial is valued at $150 billion, and there's nothing that SoftBank and Yahoo can do. You understand that? So if you own a Chinese stock listed on a U.S. exchange, you're fucked. They can do anything that they want, and you have no recourse. In fact, what I believe has a good chance of happening is that because the share price of Alibaba keeps going down, it's getting lower and lower, and Alibaba is drooling, because as the lower the price goes, the easier it's going to be for Alibaba to say, hey, you know what? We can't show our financial statements to the auditors, to the PCOAB in the U.S. So we're going to buy you guys out. Here, it's trading for $50 a share. We'll give you guys $50 a share. Think about that. Okay? And then they're going to take the shares, and it's going to be worth what? 5 times, 6 times as much on the Hong Kong exchange? You understand? So they can buy out, Alibaba can buy out U.S. shareholders. And you got, no matter what you think it's worth. And it's funny, you have all these kids out there. Yeah, look at the financials. It's got all this cash and this and that. Oh, really? Says who? Have you seen the financial statements? Have you seen U.S. regulators audit the auditors? Why do you trust Chinese financial statements? Really? Are you kidding me? Okay, here's another example right here. I want you to read this. Okay, it's an example of a Chinese company listed in the U.S. The lack of U.S. jurisdiction may hinder shareholders' attempts to challenge management's actions they may view as adverse. For example, when Chinese internet security firm Qihu 360 was taken private in July 2016, U.S. shareholders were paid $77 per share, equivalent to a total value of $9.3 billion. In February 2018, Qihu 360 relisted on the Shanghai Stock Exchange with a value above $60 billion, a return of 550% to its private owners, including company founders. As Qihu 360 was incorporated in the Cayman Islands, which offers less regulatory protection for investors, the company was allowed to be taken private by controlling shareholders. Okay. Think about that, folks. This can happen. So there's a big problem. And there's a reason why these stocks keep going down lower and lower. Why do you think Alibaba keeps going down lower and lower and lower? You all understand? You started to understand the risks involved, and ask yourself the question: why has Alibaba continued to slide, and many of these other stocks? Think about it. Why? Because people see the risks. Okay, they see the risks. Now, I don't know what's going to happen. But I can tell you that, first of all, Alibaba is not as strong. The economy in China is not so good. Second of all, I don't trust their financials, never have. Third of all, ask yourself the question, and remember, the Chinese government does not allow U.S. regulators to look at the books of these Chinese companies claiming a national security interest. So who's going to win? Ask yourself the question, who's going to win? Look at Didi. Take a look at Didi, right? Didi, 6 months, boom, they're gone. They collapsed 40-some% the other day, right? Now, Didi's a little bit different for many reasons. That's why they're, if any company has a chance to stay listed on the US market from China, I would say Alibaba probably has the best chance. But that's only because of its connection and its reach in the US with Wall Street, and it's trying to expand operations, through Amazon and elsewhere in the US. But at the end of the day, do you think Xi Jinping cares? You think he gives a shit about that? He doesn't care about that. So, on the one hand, I think they have the best chance. On the other hand, it may not mean anything. So, and by the way, let me just mention, even if the US regulators are allowed to inspect the books of the auditors in China for these companies, for Alibaba, other companies, I don't know. There's many of them, right? Even if they're allowed to, what if Alibaba says, hey, we don't want to show our books because we've been scamming people. We don't want to have to. If Alibaba is shown to have committed some type of a accounting fraud, they're going to have to restate their financials for, probably several years. That's going to cause the stock to collapse. That's going to cause a big problem, right? It's easier if they have a lot of problems on their financials. It's easier for them to get out of the situation, right? It's easier for them to get out of the situation by saying, well, we want to show our books, but we can't. Xi Jinping won't let us show us. So we're going to just go ahead and list, we're going to go ahead and just stay in Hong Kong. I think they're already listed in Hong Kong. You understand? And they can also come out and say, basically, hey, you know what? We'll offer you all as a tender offer for the outstanding shares listed on the U.S. markets. But how much are they going to give you? Think about where the stock price, it keeps going down, 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 down. The lower the price goes down, the more incentive Alibaba management has to do nothing and to buy out U.S. shareholders. No, they're not going to come out and say we've been scamming people, okay? And let me just mention something. I've mentioned this many times, and it's hard, I think, for some people to understand this. It's easier for me to understand this because I've worked on Wall Street. I've been involved in the capital markets for decades, and I've lived in Asia for many years. And the fact is this, folks, in my opinion, you don't have real stock markets outside of the Western world. It's just not. You can call it a stock market, but it's not. It's a scam. All stock markets outside of the Western world, and let me just add a caveat to that, and that is Western world in terms of being a capitalist society, capitalist with some form of democracy, because capitalism and democracy are very closely linked. If you don't have that, how can you have a stock market, a real stock market? If you understand the principles of capitalism, the principles of democracy, you're talking about accountability, transparency, right? You're talking about high standards. You understand what I'm saying? How can anyone claim that China is a legitimate stock market? Thailand, Vietnam, these are not real stock markets. Hong Kong, I think you probably can to some extent, just because there's a lot of Western influence there, right? To some extent, who knows with China meddling? The problem is that there's a lot of Chinese companies listed in Hong Kong, and I'm talking even more so. You've got a lot of problem companies, I think, listed on the Hong Kong exchange. I wouldn't consider Hong Kong exchange a truly legitimate market. It may sound crazy, but I would not. I would not. Japan, yeah, I think so. I think Japan is a role model, actually, for how, to some extent, how capitalism should be run. Japan doesn't tolerate fraud. You saw what happened to what's his name, the Lebanese guy, right? The CEO of Nissan. You saw what happened. He's a fugitive. Why? Because he didn't state his full compensation on the official securities filings. In the US, they'd be like, oh, I'm sorry, we made a mistake. Not a big deal. Okay. In Japan, he's in jail. That's one thing about the Japanese. Let me tell you, they have not allowed the corporations to take over. It's a very good thing that they've done. But when you're talking about developing countries, another example would be, what about India? Well, India is making a lot of progress, but come on, there's a lot of it's still a third world country, right? So, I think that India is on the way. They're on the way. So I think India eventually will get there, even if they're not a Western country. There's a good chance India will eventually get there to be a truly legitimate market that you can trust at some point. Um, but I would say even right now, they're more trustworthy and reliable than the Chinese market or any other stock market in Southeast Asia. I think, unless I've overlooked something. Does everybody understand that? Like, how can anybody not laugh when someone mentions a Chinese stock market it's a communist country? Like, you all understand what the stock market is, how the stock market's linked to capitalism? The stock market is kind of the overlay of capitalism. It's the way you grow companies, you're raising capital, right? I mean, it doesn't make sense. Vietnam is a communist country. Thailand is not officially communist, but they're kind of a banana republic dictatorship. They don't have democracy, that's for damn sure. So it's remarkable to me how people. In another example, by the way, is Brazil. I've warned people about this a long time ago. You know, I like Brazil. Brazil is in certain times investable, but you got to be very careful. You got to be careful in Brazil because, and I talked about this a long time ago. Probably the first discussion on Chinese securities I did, maybe in 2013. I said, listen, you got to understand these countries they're not truly Western and capitalist. The government owns the majority of many of the stocks. Okay, many of the companies that are important, that are vital to the economy of these countries, the government owns those shares. Taiwan, yeah, I mean, Taiwan is, they'll get there, but I mean, at the end of the day, this is China. Okay, I don't care what anybody says. It's China with a push towards democracy, right? But you have to understand the culture of corruption in Asia, and it's not just Asia. It's generally speaking, it's developing countries. Okay, you see it in Eastern Europe. You see it. I mean, this is why a lot of these. This is why. Why do you think the Ukraine has not been accepted into NATO? They've tried 2 or 3 times. They were rejected. Do you know why? Because there's certain standards that they have to comply with. Standards of accountability, of transparency, of anti-corruption. Do you all understand this? These are foundations that they must comply with. And Ukraine is a pretty corrupt country. This is why they haven't been accepted. And let me tell you, believe me, they've lowered the barrier when it comes to NATO and EU. They've lowered that threshold. So if they're not accepted, boy, it's really bad. Okay. I mean, take a look. If you don't believe me, take a look at Petrobras in Brazil. Okay. Take a look. I'm not even looking at it, obviously, but I already know. Take a look at the outstanding shares versus the float. And you're going to see probably half or more than half of the shares, or probably about half or less than half, are in the float. Most of the shares are not in the float. Where are those shares? They're owned by the government. Okay. And in fact, when Rousseff, not the previous prime minister was Temer, but he staged a coup to get Rousseff out of office. When she was in office, I believe it was her, the economy was in deep trouble in Brazil. And what did she do? Well, she went and told Petrobras, "Hey, you got to lower oil prices. You got to lower gas prices for our citizens because we're in trouble." And guess what? Petrobras did it. They had to do it. Do you want to invest in companies like that? How come people don't even know this? I mean, you know, you have to ask yourself this question. If you're not listening to somebody who's telling. I mean, this is not even. This is like, I don't even consider this like high level stuff. This is basic stuff that you need to know. If you're going to invest in a country, you better damn well know what the hell's going on in that country. Okay. But of course, people, they just want to chase, just like the people that chase the Kathy Wood and all her garbage stocks. you know, it's folks, listen. And I know some of you like preaching to the choir. You already know all this. These are certain things, like if you want to be successful in your life, in anything, like this, if your mindset is wrong, like you're going to constantly walk into booby traps. You're going to constantly do the wrong thing and fail. A lot of what I'm talking about is just common sense and diligence, you know? Really, it really is. But I understand these days more and more our society has been set up to make people more impulsive, especially this younger generation. They don't understand. They grew up in this society. They don't know how it was. The younger generation doesn't realize they've made young people very impulsive and not to think about things, and just it's pretty scary. And I know this because I grew up in a different period and I've seen what's happened. It's pretty scary. They want the less you think, the easier you are to control and manipulate. You see? Isn't Walmart pretty much U.S. government owned? Sir, I could argue that these mega corporations are, they're all U.S. government owned. In fact, you could think of it this way. The U.S. is very sophisticated. Everything the U.S. does is very sophisticated, very high level. And, look, we have the best universities. We have the best minds. It's just a fact. We don't have all the best minds. There are great minds around the world, but we have the best of the best. Therefore, we have a system in place to structure things to make them more complicated and more hidden. If you look at less developed countries, developing countries, look, they don't teach critical thinking in the developing world, in most of the developing world anyway. You know that. You all know that. Does anybody know this? That's how they control the people. They don't teach critical thinking. What I'm trying to get at is that these corporations, if you really understand what's going on, they're kind of like phantom operatives of the U.S. government. A great example is right now, what's going on in Russia. What happens? Well, the big mega international corporations, they pulled out of Russia, right? McDonald's pulled out. Coca-Cola pulled out, right? Another example is when these corporations, they're giving money to Black Lives Matter. They're promoting LGBT. You understand? These big corporations are the right hand or the left hand of the U.S. government. That's what they've become. They're so powerful. It's a new type of control around the globe. It's a lot of mind control. So it's very interesting if you take a look and think about it. And if you've ever traveled to some of these other countries, you can start to see it. It's pretty scary. So that's how I have to answer your question. And I'm very anti-corporation, by the way. I despise corporations. Corporations have destroyed the U.S. completely. They're terrible. They used to be really good, but things got out of control. And what happened was, well, I'm not going to get into that, but